NIO is probably a name you've heard a lot lately if you're keeping an eye on the electric vehicle industry. But NIO's stock has taken a nosedive, and it's making headlines. What's going on, you ask? Well, there's a pretty straightforward reason behind this plunge, and in this video, we're diving deep to uncover the whole story. We'll explore NIO's recent stock performance, the Chinese data disaster shaking things up, and what experts say about the future. Stick around because you won't want to miss the twists and turns in this NIO stock saga. NIO's recent performance in the stock market has been a roller coaster ride, and you might want to hold on tight to grasp what's been happening. Over the past week, NIO's stock has taken a hit, plunging by a whopping 1.26%. It's not just a short-term hiccup either. Over the past month, NIO saw a staggering 15.54% drop in its stock price. The last quarter, however, paints a different picture, with a 28.33% flourish in its stock value. Now, why is this significant for the broader market? Well, NIO isn't just any ordinary company, it's a major player in the electric vehicle industry. When a heavyweight like NIO faces such dramatic fluctuations, it sends ripples throughout the entire market. Investors and experts take notice because NIO's performance is often seen as a barometer for the EV sector's health. One of the key factors contributing to NIO's recent stock decline is the weak Chinese services data. In August, China's Caixin Services Purchasing Managers Index, or PMI, took a hit, dropping from a solid 54.1 in July to a less promising 51.8. Now, you might wonder why this matters to NIO and the global economy. NIO is a Chinese electric vehicle automaker deeply tied to the Chinese market. When China's economic indicators, like the Caixin Services PMI, show a decline, it's seen as a sign of a less robust economy. For NIO, this can mean lower consumer confidence and potentially reduced demand for their electric vehicles in China. That's a red flag for investors, often leading to a dip in NIO's stock price. But the ripple effect extends globally. When China, the world's second-largest economy, faces economic challenges, it can drag down the global economy. Lower Chinese demand for NIO vehicles could affect the company's revenue and expansion plans, potentially impacting international investors and the EV market on a broader scale. In addition to the weak Chinese services data, there's a broader picture of concern. It's not just China facing economic challenges. Other countries like the UK and Germany have also reported poor service sector data. This means that multiple major economies are experiencing a slowdown in their service industries, which is crucial for economic growth. Now, why does this matter to you as an investor? Well, when several big players in the global economy show signs of weakness, it tends to make investors a bit jittery. It's like a domino effect. If these countries' economies are not doing well, it can affect international trade, investments, and financial markets worldwide. This leads to what experts call a risk-off approach in the market. In simpler terms, it means investors become more cautious and move their money away from riskier assets like stocks and into safer options like bonds or cash. It's a defensive move to protect their investments in uncertain times. But before we continue, we want to thank you for watching this far. Now, let's talk about NIO's recent performance, and it's quite a mixed bag. In August, NIO did score a win by delivering a significant number of vehicles, which was a relief after some rocky moments earlier in the year. This delivery surge looked promising, especially compared to the lower delivery volumes in the second quarter. But during that second quarter, NIO had to make some tough calls. They slashed prices and faced lower delivery volumes, which resulted in a worrying 25% drop in vehicle revenue. Now, when a company reduces prices, it can attract more customers but also squeezes profit margins. This move didn't sit well with investors, and NIO's stock took a hit. Moreover, looking ahead to the third quarter, NIO has some exciting plans. They're anticipating a significant uptick in deliveries, with a projected range between 55,000 and 57,000 vehicles. Now, that's quite a leap, especially considering the lower delivery volumes experienced during the second quarter. In fact, if NIO manages to hit these targets, it would mark roughly a 150% increase in deliveries from the second quarter. CEO William Binley seems confident about this trajectory. He proudly stated that NIO's current delivery performance has propelled them to the top position in China's premium electric vehicle market for vehicles priced above 300,000 renminbi. This bold claim shows NIO's determination to make a strong mark in the Chinese EV sector. So, while there have been challenges, NIO is setting its sights on a robust third quarter with an eye on a leadership position in the premium EV market. On a technical note, let's delve into NIO stock and see what the charts tell us. There are some key resistance and support levels to keep an eye on. Currently, NIO stock has been hovering within a range of $10.15 to $11.30. This range has been a bit of a comfort zone for NIO, and it's where buyers have shown interest in picking up shares. Now, as we approach the monthly delivery announcement scheduled for October 1st, there's potential for a breakout. If NIO manages to break through that $11.30 range, it could give bullish investors a reason to increase the stock price. That's when things might get exciting, and we could see NIO aiming for the $13 to $14 resistance range. This range has acted as a ceiling in the past, but a strong push could change that narrative. However, do keep in mind that NIO experienced a bit of a setback when testing the $16 level on August 4th. So, while there's potential for a breakout, it's not guaranteed. Furthermore, NIO has received attention from analysts who seem to have mixed opinions on the stock. Among these analysts, 22 rate it as a buy, signaling a positive outlook. Another 5 analysts label it overweight, suggesting they see potential in NIO's future performance. On the other hand, 10 analysts recommend a hold position, indicating a more cautious stance, and 2 advise selling NIO stock, signaling a bearish sentiment. Now, let's talk numbers. The average price point these analysts forecast for NIO Incorporated is approximately $95.49. This forecast is notably higher than the current market price, which implies that analysts anticipate potential growth in NIO's stock value. However, it's worth noting that NIO's stock has had its ups and downs. It's currently trading at a significant distance from its 50-day moving average, suggesting some volatility in recent trading. It's also below its 52-week high, which means that while the stock has seen better days, it's not at its peak. So, as you look at NIO's stock, it's essential to consider both sides of the coin. On one hand, there's excitement about NIO's strong delivery numbers and ambitious plans for the future. Analysts are optimistic about its potential, with many recommending a buy or overweight stance. But on the other hand, recent price cuts and lower delivery volumes have raised some concerns and led to a bit of stock price turbulence. Additionally, the broader economic context, like the weak Chinese services data and global economic worries, adds an element of uncertainty. The key takeaway here is to stay informed. Keep an eye on NIO's developments and the broader market conditions. It's a dynamic landscape, and things can change quickly. So, whether you're an investor or just curious about the electric vehicle industry, staying up to date is your best bet. If you are a renewable energy enthusiast and want to diversify your portfolio, you should continue watching and taking advantage of this enormous opportunity. That led us to our sponsor for this video, with the ticker code SUNN, SolarBank Corporation. SolarBank is one of the hottest and fastest growing sectors in the world. It's a stock with a lot of potential for the future, as it is taking advantage of the $369 billion spending package the US government is offering to companies that deal in clean energy. It's a stock that has gone from a low of $1.90 on March 2nd, 2023, to a high of $9.25 in June 2023, an increase of over 400%. That's impressive. It's a stock that you should consider investing in today, as it is still trading at a very attractive price. The SUNN stock is on fire, as a renowned analyst's price target in the coming days is at $14. That's wild. On top of that, our sources shared that huge news will be coming out soon and could change the landscape of solar power development, and this news could skyrocket the stock even further. However, even without this intriguing news, a $14 jump is already a win for all SolarBank investors today. Make sure to watch to the end. It's essential to get to know SolarBank before investing in it. Let's dive in. SolarBank Corporation is a company that specializes in solar power development, installation, and operation in the USA and Canada. It has a vision to accelerate the North American energy transition and help its customers achieve their net zero goals. SolarBank Corporation has a unique business model that covers the entire solar project lifecycle, from identifying opportunities to negotiating deals to building and operating solar farms to selling back the power to the grid or private entities. SolarBank Corporation generates fees and cash flow from each process stage, creating value for its shareholders and stakeholders. SolarBank Corporation has been active in the US and Canadian markets with different strategies and focus areas. In the US, SolarBank Corporation is a full-service solar developer with a development opportunity of over 250 megawatts in New York and Maryland. SolarBank Corporation focuses on US commercial, industrial, and community solar opportunities. In 2022, 6 solar projects were placed in commercial service, 2 with municipal PPAs, 1 zero export, 1 for behind-the-meter net crediting, and 2 community solar projects. In Canada, SolarBank Corporation participated in the Ontario Independent Electricity System Operator (IESO) feed-in tariff program under the Green Energy Act. SolarBank Corporation's focus on small feed-in tariff retrofit, solar projects, rooftop, and ground mount installations drove success in all areas. SolarBank Corporation developed relationships with over 1,000 commercial, industrial, institutional, and private property owners, securing suitable solar photovoltaic installation sites. SolarBank Corporation consulted with over 50 municipalities to gain client project support, approvals, and permits. SolarBank Corporation worked diligently with the IESO to win nearly 200 MWP of FIT contract awards. As a licensed engineering consulting firm, SolarBank Corporation's professional engineers designed and built hundreds of small FIT solar projects, up to 600 kilowatts DC each. SolarBank Corporation manages more than 90 projects with the size of over 30 megawatts of solar FIT assets under operation and maintenance contracts. SolarBank aims to become an independent power producer, IPP, that owns and operates community, utility-scale, and behind-the-meter solar projects. SolarBank Corporation is taking advantage of the Solar Investment Tax Credit, ITC, that applies to residential, commercial, and utility-scale developers and will create an effective discount of 30% on the capital cost of solar installations until 2033. SolarBank is led by a team of experienced professionals with expertise in real estate, construction, finance, and marketing. SolarBank Corporation's insiders are buying shares in the company, showing their confidence and commitment. According to the Canadian Insider website, SolarBank Corporation's insiders have bought over 1 million shares worth over 6 million Canadian dollars since June 2023. That's an impressive milestone and remarkable progress. It's a fantastic contribution to the community and will ensure that SolarBank becomes one of the top stocks to invest in over the coming months. SolarBank's market cap as of September 15, 2023 is 207 million Canadian dollars with an average volume of 11,042 shares. SolarBank is a stock that you don't want to miss out on. It has a bright future ahead of it, powered by the sun. According to the Energy Business Review, it is one of Canada's top 10 renewable energy solutions providers in Canada for 2023. SolarBank Corporation, with the ticker SUNN, is a stock you should put on your radar and take what's yours. If you want to learn more about SolarBank Corporation and its projects, you can visit their website, view their presentation, watch their CEO's explanation, or check their insider transactions. So, what are your thoughts on NIO stock recently? And share your thoughts about SolarBank Corporation. Is it something you want to include in your stock portfolio? Let us know in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about NIO, I recommend watching this fantastic video. Just click this video right here. Thank you for tuning in, and stay tuned for more exciting stocks you can invest in. Happy investing, and I'll see you in the next one.